With record high increases in real estate prices in 2021 and talent shortages hitting the industry in a really big way, salaries in the commercial real estate industry have seen major spikes in the last 12 months. And with that, we're starting to see a lot of industry professionals looking to jump ship, trying to take advantage of a market value that has in many cases jumped by 10 to 15% or more just in the last year. But obviously, all jobs aren't created equal, and picking the right next opportunity is a really big deal when trying to maximize your pay. So whether you're looking to break into the industry for the first time and just want to make sure you're starting out on the right foot, or you're already in the industry and want to test the waters to try and land a raise or promotion at a different company, in this video, let's walk through 4 methods that you can use to make more money in the commercial real estate industry today, and how each of these things can really move the needle. So when we're talking about jobs and careers, the conversation would not be complete without talking about money. And as much as people try and downplay the importance of this, how much you're getting paid really matters a lot. And knowing what I know now, if I wanted to maximize my income early on in my career, there are a few main things that I would focus on to make that a reality. And the first thing that I would do to make that happen is something that I'd recommend for a bunch of different reasons, not just financial, and that is to try to land a job in a major gateway market. Having started my own real estate career in the college town of Tucson, Arizona, a place with a median per capita income of just over $23,000 per year, and also having worked in Newport Beach, California, a place with a median per capita income of over $127,000 per year, I can tell you firsthand that there is a massive difference between what you'll get paid in a tertiary or even secondary market in a major gateway metro. Now, obviously, the cost of housing is going to be higher in a major city, but the line items that make up the rest of your living expenses, like groceries, transportation, and utilities, don't vary all that much from market to market. And going back to housing, if you're looking to keep more of what you earn in a high cost of living area, you also don't necessarily have to live in the exact same place that you work, which can have a huge effect on your expenses, but fortunately won't affect your pay. In Newport Beach, for example, the median rent for the 92660 zip code was $3,780 as of December of 2021, according to Zillow data, which would put you right next door to most major commercial real estate firms in the market. However, if you move just 15 to 20 minutes outside of Newport Beach to a city like Fountain Valley, that median rent drops by almost 36% to just $2,431 per month. Salaries also tend to be much higher in major metros because the transactions you're going to be working on in these markets have significantly higher whole dollar amounts, and lease rates, purchase prices, and sale values are ultimately going to directly impact the amount of leasing commissions, acquisition fees, and promoted interest a commercial real estate firm is going to earn and ultimately distribute back to its employees. Now, obviously, not everyone's going to be up for a cross-country move, so if you like where you live and you want to stay put, my next recommendation is applicable regardless of where you're located, and that is to target roles where you are directly involved with a transaction rather than just the management of an existing property or an existing portfolio. Real estate professionals who are most directly involved with acquiring properties, selling properties, and raising capital also tend to be the most highly compensated professionals in the industry by a pretty wide margin. So if you're looking for a big jump in pay, these are the types of roles that you'll want to set your sights on. All else being equal, acquisitions analysts tend to make more than asset management analysts, investment sales analysts tend to make more than portfolio management analysts, and debt and equity placement analysts tend to make more than their counterparts servicing those loans at banks or insurance companies, or working in investor relations at a real estate private equity firm. And this is primarily because acquisitions, investment sales, and debt and equity placement roles are focused on buying properties, selling properties, and raising capital, all of which are actions that tend to create the majority of the revenue generated by a real estate investment, development, or brokerage firm. Now, I'm not saying that you can only make great money in transaction-oriented roles, but regardless of the path that you choose, if your goal is to maximize your pay, you'll want to get as close as possible to the revenue-generating activities of the firm, ideally with a focus on sales, capital raising, or a mixture of both in your position. Now, if you don't want to move to a different city and you don't want to be in a forward-facing transactional role, my number 3 recommendation on this list doesn't require either of these things, and that is to shift your focus to a product type with a higher level of complexity. According to the most recent CEL and Associates annual compensation survey, the highest paid acquisitions associates working in the residential sector were paid an all-in compensation package of just under $157,000 per year in 2021, which is a respectable number in most US markets. However, if you take a look at other asset classes in the business, the highest paid acquisitions associates working in the retail sector were paid an all-in compensation package of just under $169,000 in 2021, or $12,000 higher than their peers working in multifamily, and the highest paid acquisitions associates in the office and industrial sectors were paid an all-in compensation package of over $183,000 in 2021, or $26,000 higher than their peers in the residential space. And a lot of this discrepancy has to do with what these acquisitions associates are required to do on the job and the different skill sets that are required in each of these positions. In multifamily focused roles, leases are relatively standardized, modeling is all done in Excel, and value creation is primarily focused on improving operations and a hands-on approach to the management of the deal. However, in commercial focused roles, the ability to understand complex lease terms starts to become really important. An Argus skill set is often expected in addition to a strong skill set in Excel, and value can be created very, very quickly and dramatically on these deals by finding opportunities in existing lease structures, which places a premium on talent for office, retail, and industrial focused positions. And for those of you who plan to go out on your own one day, this is especially true and even magnified for real estate entrepreneurs, since retail, office, and industrial deals with complex long-term in-place leases tend to be a lot harder to understand, which shrinks the buyer pool and reduces competition, giving you a better chance of ultimately finding better deals in these sectors. One of the wealthiest real estate investors I know, with a personal net worth of over 9 figures, always used to say to me that the deals that are the hardest to figure out are usually the ones that are the most profitable, and I've definitely found this to be true whether you're looking to maximize your pay when working within an established company or when building your own portfolio and trying to grow that as quickly as possible. Now finally, if you don't want to move, you're not up for changing your job function, and you want to continue focusing on the product type you're already working on, my final recommendation on this list to increase your pay is directly related to the last point I mentioned, and that is to jump into entrepreneurship and go out on your own. Now obviously, this is not easy and definitely not for everyone, but if you want to make huge leaps in how much money you're making over the next 3 to 5 years, entrepreneurship can be a great way to make that happen. In startup real estate firms, overhead tends to be really low, and you can usually just get started with 1 to 2 partners with complementary skill sets, even without office space, if you want to keep things lean. And with the high price point of most commercial real estate transactions, especially in major markets, just 2 to 3 deals per year in the $5 to $15 million range can often get you to a point where you're matching or even exceeding what you were making in a salaried position on acquisition fees alone, and this isn't even counting any ongoing asset management fees, construction management fees, or promoted interest when the deal ultimately ends up being sold. And from a long-term perspective, real estate entrepreneurs that build a strong track record over a 5 to 10 year period tend to far out-earn what they would have made in acquisitions or asset management positions at their previous employer. So if you're willing to deal with the inevitable ups and downs of building a company, striking out on your own can be a great way to remove any sort of income ceiling that you might be hitting at your current employer or within the industry as a whole. Overall, in my opinion, this is one of the best times in history to be in the real estate industry, and there are a ton of opportunities out there today to boost your compensation in a really big way. And if you're looking to break into the industry for the first time and want to make sure you're maximizing your pay from the start, or you're already in the business and looking to make a move within the industry to take your career to the next level, as always, make sure to check out our all-in-one membership training platform, Break Into CRE Academy. A membership to the Academy will give you instant access to over 120 hours of video training on real estate financial modeling and analysis. You'll get access to hundreds of practice Excel interview exam questions, sample acquisition case studies, and you'll also get access to the Break Into CRE Analyst Certification exam, which covers topics like real estate pro forma and development modeling, commercial real estate lease modeling, equity waterfall modeling, and many other real estate financial analysis concepts that will help you prove to employers that you have what it takes to tackle the responsibilities of an analyst or associate at a top real estate firm. And if you like this video and want to see more content on this channel on commercial real estate careers and compensation levels, make sure to hit the like button to let me know, and let me know in the comments any moves you've made to make more money in the industry and any recommendations that you'd add to this list. As always, thanks so much for watching, guys. I hope you found this helpful. Subscribe to the channel if you haven't already to see more videos like this every single week, and I'll see you in the next video.